I'm Rani Shalev and the co-founder of Shalwin Properties. Do you ever wish you had the freedom and flexibility to do what you want with your time instead of feeling at the mercy of your job? When I was an emergency room doctor, my high pressure job sucked the life out of me. I was great at my job, but at the end of the day, I was weary, I was burnt out. I couldn't enjoy my family, my kids, or my day to day life. I longed to be able to step back from the demands of my job and reclaim my time and my life. But since I made great money, I felt stuck in golden handcuffs and there was no end in sight. That's when I started exploring the world of entrepreneurship, specifically investing in real estate syndications. As a passive investor in apartment syndications, I finally found a way to make recurring income without having to do anything but put my money to work for me. As time went on, the income I earned from my investments allowed me to quit my grueling emergency room job and finally enjoy a more balanced life. I've spent thousands of hours and tens of thousands of dollars learning how to invest in real estate. And my mission is to share this knowledge with anyone who's feeling stuck, who wants to create more space, more freedom, more flexibility in their lives, and really live the life they've always imagined they would live. With that said, this webinar will focus on the proven strategy I've used to create wealth using passive real estate investing. This is my disclaimer. This webinar is for informational purposes only and is not a solicitation for money. The numbers in this webinar are not future projections. And oh yeah, by the way, I'm not a CPA and I'm not a lawyer. I'm not giving any legal or tax advice. So there's many different reasons that people invest in real estate. It provides cash flow. It has incredible tax benefits. Real estate appreciates in value. It allows for diversification. You can choose different markets, different asset classes, and you can really mitigate a lot of the risks and have risk-adjusted returns. And another one is capital preservation. You are preserving your capital a lot more than you would in the stock market. Because when you're investing in a real estate, you're investing in a cash flowing asset and there is money coming in from the business itself, but there's also a building and there's land. So chances are your investment is not going to ever go down to zero, especially because of this capital preservation. So what's the strategy? It's important to create a strategy in order to build wealth. And part of that strategy is investing in cash flowing businesses and assets, things that are already making money and have been successful. And investing all of your surplus. That means instead of sticking it in savings accounts, stick it into investments and investing it into value add recession resistant real estate that also gives you tax benefits. And that kind of real estate is really the apartments that I'm talking about, multifamily. When you're using debt or leverage, this helps protect you against inflation and accelerates your returns even more. So how do you do it? Well, you invest in syndications that are purchasing properties that are value add apartments using debt. And then you keep repeating it and you keep repeating it. And every time that you have a little bit of extra savings, you don't stick it in your bank account, you stick it in another investment. And really, that is, in a nutshell, what the strategy is. Okay, you're saying, well, let's back up here. What is a syndication? Well, a syndication is a partnership between investors. Active investors and passive investors pool their money together to purchase a large commercial asset like an apartment complex. And usually these are not, small deals. These are between $10 million and $100 million. And you're purchasing these large assets with a loan. So how does it work? Well, you would be the passive investor, and I would be the active investor. So how does it work? Well, I find and buy the deal. You invest passively alongside me and my company. We take care of the operations to increase the profitability. You get paid first, and we all share in the upside. How does that sound? Sounds pretty good, right? Well, what do the numbers look like? Let's look at the numbers here. This is an example that I've completely made up, okay? But these are the typical numbers and what they look like. So typically, you'll see an investment and you'll say, oh, well, you can get 2x your money. at the end of the hold period. So what's the hold period? It's typically 3 to 5 years. So in 5 years, you get double your money or 100% return on your money. So what does that mean? So you put in $100,000 and in 5 years, you have $200,000. So it's not a put in the money and wait 5 years and then you'll get it at the end. You're actually getting paid throughout the life of the investment. So typically the cash flow ramps up in years 1, 2, 3, 4, and 5. So in the first year on that 100,000, you'll get $4,000. And then in year 2, you'll get $6,000. In year 3, you'll get $8,000, $10,000, $12,000. So you're getting money throughout the life of the investment. And then when we sell the property, you get not only do you get your investment back, but you get the profit on your equity. So you get another $60,000. And that's how we've come up with $200,000 at the end of 5 years. Now, this is underwritten or written or analyzed over 5 years. A lot of times these deals go shorter. A lot of times they go within 3 years, less than 5 years. So but they're always conservatively written over a 5-year hold. So yes, the numbers look great. You're getting cash flow, you're getting money at the end. But the biggest thing is that you have these huge tax savings also. I don't know if you know this, but the government rewards real estate investors through tax breaks. With a combination of a cost segregation study and bonus depreciation, you get huge tax savings. A $100,000 investment might give you up to $90,000 of a tax loss against your passive income. Now, again, I'm not a tax professional or CPA, so you can ask all these questions to your CPA, but I'm telling you, it's true. And I'm going to show you an example. This is a K1. That's mine. You can see my name here, Ronnie Shalev. And I invested in 2020 in a deal, and I put in $100,000. You can see here where where it says capital invested, and I circled it in red. But my K1 said I lost $102,000. It's like, you're saying, what happened? Oh my God, did you invest in a deal and lose $102,000? No, this is a phantom loss. This is from the depreciation in the components of the building. The IRS is being told that I am losing value in my investment of $102,000. However, I'm still getting cash flow. And when this property gets sold, I'm still going to make a profit on the deal. But because I've been able to shelter some of those tax gains of $102,000, and by the way, these carry forward, I have the huge tax benefits. So you're saying, wow, that's great. Cash flow, tax benefits, appreciation. Well, what are my risks? Well, not taking action. Not taking action is actually a risk. Not doing something is a risk, because a day is going to come when you're going to wake up and you're not going to want to go to work like I did. I didn't want to go into the hospital. But you know what? You'll have to, because your income is dependent on you being an active worker. The only way that you'll ever change is if you have passive income that pays you to sit back and collect the checks. That's how I was able to leave my job that I hated and couldn't handle. What are the risks? Well, you're saying, I don't know how to do this. I can't do this. I don't have experience in vetting good deals. Well, finding one great deal takes looking at 100. You don't have the time to be looking at 100, right? Well, that's why we're here. You don't have the time or the expertise, but I do. Shalwin Properties does. We come in, we know how to vet the deals. We know how to look at the markets. We know how to look at the operators. We do it all for you. Then you're saying, you know what? Okay, yes, you're going to do it for me and I'm going to get this passive income, but my money will be locked up. I won't have any liquidity. Well, you know what? You can invest not just with cash. You can invest with your retirement accounts that you wouldn't be touching anyways. You can invest with your trust, with LLCs, with cash. And don't forget, you're getting cash flow from that property throughout the life of the investment. It's not like your money is just locked up and you're never going to see it. But you know what? The lack of liquidity is better than, I think, taking your money and just sticking in a savings account that's constantly going to lose value from inflation. So really, it's really a decision on lack of liquidity versus loss of the value of your savings because of the inflation that's going on right now. Well, you're another risk, you're like, oh my gosh, well, what if we lose it? What if we lose everything? What if the whole apartment complex is, a tornado comes and just knocks it all off? Well, your personal assets are not at risk. You're a limited partner. You don't sign on any loans. You're protected from any lawsuits. The only real capital that you could possibly lose is the capital that you've invested. But even in that scenario, the risks have been mitigated. The active general partners, the sponsors, they've purchased insurance. They've purchased business interruption insurance. This asset is insured up to wazoo. So all of these risks have been considered, but they've been mitigated. So what does financial freedom mean to you? Well, technically it means getting enough monthly passive cash flow that is more than your monthly expenses. That's when you can financially be free. You're covering all of your bills. To me, it means I have choices. I have the choice and the freedom to decide what to do with my time. If I want to go to work, I do. If I don't like my job or I don't like my boss, I'm not trapped in a job. I can leave. I'm getting enough cash flow that I don't have to worry about paying my bills. So do you have a predictable strategy to get you there? This is it. This is how you do it. This is where I need you to schedule your call to get started investing with Shalwin Properties. Well, you're asking, okay, you're asking all these things in your head, right? How do we mitigate the risks? Well, there's a lot of risks. The team is the most important part of our operation. We work with teams that have collectively been involved in over $100 million of deals in really all aspects of commercial real estate. We're constantly studying the markets. We're constantly learning the macroeconomics so that we can be confident not only in identifying a good deal, but jumping on it when we see one. And on top of it, we're investing our own money into these deals. It's not like we're taking your money and that's it. We're putting our time and our money into these deals. What if something goes wrong, you're thinking? Well, that's what mitigating risks means. We build in the reserves for when things go wrong, not if they go wrong. Because this is real estate. There's no 100% guarantee on any projection. But if you have an experienced team that knows the market, knows the macroeconomics at play, builds a buffer into the numbers so that when things go wrong, not if things go wrong, but when things go wrong, they can still provide a predictable return. And they can navigate all the landmines. This is why choosing your team is so important. Having a good plan and an exceptional team mitigates these risks. So you're saying, wow, this is amazing. Why isn't everyone investing like this? Well, there's a ton of people investing in apartments. There's a ton of people investing in apartment syndications. There's so much money that's flowing into commercial real estate from all over the world. There's a very high demand. But you know what? If you choose to not do it, or if you choose the wrong team, this is where your risks are. This is why it's important to choose people that you like, that you know, that you trust, that have the expertise. And this is where we come in, Shalwin Properties. So how can you get involved? Well, there's great opportunities ahead in our target markets, but it's only for a select number of investors. And when I say select, I mean it. Every investment, we're only raising a limited amount of money. Once we have all the investors, we don't let anybody in. We've turned people away that have wanted to put money in our deals because we didn't need their money. We'd invested. We'd already raised all the money that we needed. So it's very important to set up a call so you can talk to me. I can learn about you, your goals, your timeline, and really the next steps on how you can achieve your wealth building strategy. Click on the link below to schedule your appointment and let's get started. Let's get started today. Remember, there's no risk to this phone call. There's no risk, there's no cost. Just get on the phone and just talk. Talk to me. Tell me what it is that you want out of your financial future. Schedule a call. And again, remember, we'd love it if you followed us on Instagram and on social media, on Facebook.